Advisory services offered through VestGen Advisors, LLC, an SEC-registered investment advisor. Securities offered through Private Client Services, LLC, member FINRA and SIPC. Private Client Services and VestGen Advisors, LLC are unaffiliated entities. Any information discussed does not constitute investment advice. VestGen Advisors and Private Client Services do not offer tax or legal advice. People of Chicago, welcome to In the Know Radio with Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. You want help from someone you can trust, someone who knows what it takes to get retired and stay retired. Today, Craig's going to teach you what you need to know. So get ready to learn something that could change your life. Get connected to the show by calling 833-964-PLAN or go to getretiredstayretired.com. And now, here's Craig Bolanos.
Hey, good morning, everybody, and a very happy Sunday to you. Sincere and actionable ideas is what we deliver every week. And you know what? Retirement planning, the entire genre of retirement planning, it's chock full of advice. But how much of that actually applies to you? And how do you know when you're personally ready to retire? You know, if you've come across so-called hacks, you know, they're all the what I call finfluencers, financial influencers, because I see hacks all the time about lowering your taxes, one-size-fits-all investment strategies. Well, you know what? A lot of those finfluencers and different things, some of the information, it's not that it's overwhelming. Some of the information could be misleading. And the truth is, your retirement plan is as unique as you are. Absolutely. Let me say it again. Your retirement plan needs to be as unique as you are. And today I want to spend time. I want to cut through the noise, dive into the essential frameworks. It's going to help you build a strategy, something that's tailored to your goals, your timeline, your future, because you need to understand what's involved when making a move into retirement. And I couldn't think of anyone better to help me do this than David. David, you know, when we talk about understanding retirement readiness means different things to different people. You know, retirement isn't just about having a nest egg. Retirement readiness is about having a plan. And it's a plan that's the hallmark of preparedness and flexibility. I say those two words all the time, David, preparedness and flexibility, because the world is changing constantly, and unexpected life events, yeah, they come at you with frequency. That's what makes life interesting. So, David, what are you doing as one of the best advisors at VestGen Wealth Partners to get the families that you serve into a spot of retirement readiness?
Well, I think one of the terms we use all the time is being centered in your finances. And I think this is also being centered in yourself because, as you always say, you got to find something to retire to. But what I know with certainty is when you put these plans together, if you don't put in good data, you're not going to get good data out. So garbage in, garbage out. We got to take a step back and actually go through your numbers. And for a lot of folks, I think that's hard because even families we work with, not every client I work with runs their life off an Excel spreadsheet or off Quicken. And if
so
you
David,
don't do
I got to pause for a minute. Give our listeners an example. When you're talking about retirement planning and you say it's really all about the quality of the data, the quality about the input, what are you referring to? Because account balances, they're not subject to bias. You know, what you're going to get from Social Security, those are just facts like account balances. So when you say bad data in a retirement plan, give us some examples of that and how you help people correct them.
Well, sometimes to get back to this, Excel example, right? If you're not tracking all of your expenses, which I don't think is a requirement throughout life, and we are, misappropriating dollars to different sectors, we're not creating the right target. A lot of people, rationalize to themselves that they only need the small amount of money in certain cases because they don't want to work anymore. And that's okay. But let's be honest. If you're a family, a dual income household, and you're making $150,000 to $250,000 a year, but you tell me that you can live off $4,500 a month of income, those numbers just don't jive. There's a huge difference. So I think that there is going to be this moment where you're going to have to sit down and say, hey, look, I can track these utility bills. I can track the mortgage. Hopefully you don't have a mortgage and you're just tracking the property taxes. But then we have to find the stuff that is harder to track, which is, are your kids still on your payroll? Are you still paying their insurance? How much are we spending in what I call soft dollar expenses of going out to eat and making online purchases? So we really have to narrow that focus. And I think for folks that are having a hard time doing that don't like to put all that stuff down on paper, take a look at what you're actually bringing in net of income taxes, after health insurance deductions, after 401k contributions. And that's a good starting spot for what you're kind of living off of now. And we can probably help fill the gap and narrow that down to say, well, here's probably how much you're going to need. And to your point, Craig, the nice thing is the balances of the accounts are right there in front of you. So I'm confident in that data. What I'm not always confident is our expectation on what it's going to take to get the job done and what people are actually spending for things like travel and leisure, which we know has gotten much more expensive. So,
well, David, that's fantastic. So you heard it here. I think the big thing is a big part of retirement readiness is awareness. And it's time that you too get a good retirement income plan. That's a retirement income plan. And a retirement income plan is not a simple online calculator. You can't afford to simply type in your current assets into the computer. You can't afford to simply assume a fixed rate of return. You can't assume a fixed rate of inflation. You need to do something that's more robust. And the biggest part of it is good data comes in, good data comes out. And you heard it from David, one of VestGen's top wealth advisors. You need to be authentic and honest with your meals and entertainment, your honesty with your travel and leisure, your honesty with those soft dollar spends. We know what the utility bills are. We know what the property taxes are. It's all the other stuff. And at VestGen Wealth Partners, we've got a great system to help you align with what you need. Because David, the truth is we have clients in 41 states. And the reality is we know there's a minimum amount that people need to get retired and stay retired. And it's interesting, clients come in different shapes and sizes, but how often do we see that it all reverts to the mean or becomes somewhat normal? So if you need some help and you want to get those conversations started, give us a call, 833-964-PLAN, 833-964-PLAN. Let us help you go through your own VestGen vision process to work towards retirement. And speaking of retirement, I want you to connect with us online today at getretiredstayretired.com, getretiredstayretired.com. We've got two great guides right on that website. Guide number 1, optimizing your Social Security in today's world. There it is. I want you to download for free today, optimizing your Social Security in today's world, and OBA, the One Big Beautiful Bill Act, and the tax opportunities that are specific to investors. Download those for free today at getretiredstayretired.com. David, we're talking about retirement readiness on a Sunday morning. You talked a little bit about the foundation of that income plan, which is good data. What else do you need from people as you help them go through this journey towards retirement readiness?
Sometimes people ask us the question, they say, like, why are you a good fit for me as I'm preparing for retirement? And one of my common answers is because that's all we do at VestGen, right? Our clients are either on the cusp of or recently retired. So we know where the lines in the sand are. We know what to plan for. And as we always say, good advisory firms are always thinking 2 to 3 steps ahead. But when we talk about this data, good data in, good data out, you mentioned some of the online influencers and some of the calculators. And one thing I would draw people's attention to are what are the assumptions that some of these calculators are using? Because based off what I've seen, and I'm sure you would agree, Craig, I'm not sure that those are actually realistic for a lot of folks we work with. I'll give you an example. Perhaps the financial calculator has you passing away at 85, right? Now, you might not think you'll be around for a long time, but I can speak for myself. Our clients are going the distance. They're living longer than average, right? They're conscious of their health. They're conscious of their finances. Are we actually planning out far enough in advance? as medications and healthcare are allowing us to live longer. Likewise, are the inflation rates accurate? And I would also say this, are the investment rates of return that they're using accurate? And here's the reason I say that. If they're assuming that you're invested in a 100% stock portfolio, go look at your 401k and see if that's how you're allocated. Because they assume you're making X percentage, but you're invested in a way that will never generate those returns. I'm not sure that's an accurate depiction of what's going to actually happen. But if you find a firm like ours that says, look, this is how it's going to work in real life, this is how much we should really be budgeting for these particular expenses, I think we're going to narrow the gap and create some clarity so that you're armed with the education so you can make decisions based off fact, not based off fiction from some of these online influencers, as we alluded to.
Well, that's fantastic. So, David, for everybody listening, I want you to go through our VestGen vision process for retirement. It's robust, it's sequential, and most importantly, it's TNT. David, quickly, tested in the trenches for retirement readiness means what?
It means we've been there, we've done it, and we've actually ridden through several bear markets. We know what it takes to get done. It is not a one size fits all. It is a process that you go through, not a product you can buy.
Get that VestGen Vision Retirement Plan today at GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. On that website, connect with us for that complimentary consultation, and be sure to download Optimizing Your Social Security in Today's World and the One Big Beautiful Bill Act, Tax Opportunity for Investors. All right, more to come. We're talking retirement readiness in the know. VestGen Wealth Partners, Craig and David Bolanos, AM 560.
You want more in the know radio? You want more in the know radio? You can't handle more in the know radio. Okay, yeah, you can. And it's on AM 560. The Answer. Welcome back. Here's more with Craig.
Today is all about retirement readiness, and we want to inspire you to do better. We want you to do this retirement readiness against your own potential. Sometimes it's you against you, and we're here to help you get you out of the way. David, as we unpack retirement readiness using our VestGen vision process to help people seamlessly navigate the waters of jobs data, interest rates, different economic cycles, and again, that concept of needs versus wants to articulate a very effective corridor of cash flow planning. One of the things that I think people constantly come up with is they say, is there a system? Is there a set of rules? David, is the 4% rule still applicable in today's environment, or do you think that should be modified? That's question one.
I just read an article the other day, and you may have seen it come across your feed too, that said the starting point for retirement distribution should be 3.7%. So I guess I would argue 4% is a great starting point to have a conversation, what I call back of the envelope math, to see if it's going to work. But the reality is everybody retires at a different age and has different longevity expectations. So if you're retiring at 55, that's a lot different than retiring at 72. And I think we need to take that into account. We also need to account for how one is invested as well. But to answer your question directly, great starting point. It's different for everybody. And here's another point I'll make. Think of how challenging that distribution rate was several years ago when interest rates were at zero. When rates are at zero, it's hard to have a high distribution rate. But we had a massive increase in rates. It takes some of the pressure off when there's money market accounts paying 4%. So if you're at home trying to do that back of the envelope math, I think that's a great way to get started. But retirement planning is just constantly refining that process. So find a good team that does this every day that can say, great, now if your distribution rate's 4% or 4.25, here's how we curate the investments to hit those goals moving forward.
And David, you had said earlier, a great starting point when people go, I know how much I want to have each month to retire, but the reality is, what do I need to have each month to retire? You talked about the concept of take-home pay. look at your current take-home pay, and that's a great starting place to talk about the budget. So, David, we read in all these online chat forums that everyone has access to about maybe you're going to need 70, 80, 90% of your pre-retirement income to get retired. What do you see as a practitioner, and how do you coach people through that?
I think it depends on your income level, to be honest with you. I mean, if you're making several $100,000 a year, it's unlikely that you're going to bring in that same dollar amount in retirement. But if you're making $100,000 a year, I think a lot of folks in retirement end up generating almost the same amount of income. That's what I see. But I also see that, Craig, I think, because a lot of families we engage with are just very diligent savers. So regardless of their income, the percentage that they've been deferring into their 401ks, 403bs tends to be pretty high and stable. So that helps put them in a really good spot.
And David, without giving away all the answers, but to give someone some little secrets, some things, I think wisdom comes from experience. And sometimes that means experience. The more you age, the older we are, the more wisdom we sometimes have. So David, if you could share with everybody one or two secrets where you find up everyone coming short when it comes to building their retirement plan, what would be the one or two things that you wish everybody could turn back the clock of time on right now to start doing better?
Number one would be debt. So rule number one for me is you don't want to retire and owe anybody any money. And that could be a mortgage, a HELOC, your kids' student loans, or you remodel your entire house the day after you retire. I think those are projects and tasks that you want to solve before you actually step away from getting that paycheck from your employer. So that would be number one.
A big part of retirement readiness then is getting the family home. Or retirement ready. Get all the projects done. Get the renovations done. Don't push them off until you retire, and do everything you can to attack the debt side of the ledger with a vengeance. Get those student loans paid off. Get rid of the HELOC. Get rid of the mortgage, because the single greatest way to increase your free cash flow, and retirement's all about cash flow, is to not have debt. We're talking about retirement readiness today. And I said, David, if you had a wish list that people could turn back the hands of time and focus on a handful of items to get retirement ready, your first is be conscious of the debt side of the ledger. What's number two for your list as one of the top wealth advisors at VestGen?
Test drive it before you actually buy it. And what I mean by that is if your game plan is to live off of $8,000 a month, how about we try living off $8,000 a month before you have that conversation with your boss? We don't want to be completely test driving this after you've put in your 2-week notice, because most people are going to live off a smaller amount of income when they retire. It's not going to be 100%. So to the extent that we can test drive that, I think that puts people in a good position. How do we test drive it? I mean, an example of test driving it is if you just set up an automatic savings plan from one bank account to the other, right? So you're reducing your spending capital. That's a very easy way to see if you and your spouse, you and your significant other can make those numbers work. But I think that creates a lot of clarity. And if that teaches you that, hey, maybe now is not the right time, or I just need to push one extra year, get a higher Social Security check, then I think that's worth the time to start, test driving it before you actually step away from work.
I think that's brilliant. But big part of retirement readiness is test drive your retirement. That's not necessarily a vacation. What we mean by that instead is get on that budget. What's your retirement income going to be? And live to that retirement income for a period of 3, 6, 9, 12 months. And if you can do it, that proves out the concept and reduces that natural anxiety. David, great things always come in threes. What would be your third wish for everybody if they could turn back the hands of time for retirement readiness?
Above and beyond that basic budgeting, I think it's being realistic of what your responsibilities are, right? So if you're retiring, you might be the matriarch or the patriarch of the family. And we need to be realistic that in doing that, that means you're always there to help out your other family members. So if the kids are still on your cell phone bill, you pay all their auto insurance, their property and casualty insurance. Let's be realistic that oftentimes the kids will come calling from the bank of mom and dad. And if you are the bank of mom and dad, and you know that you've got a couple $1,000 outlay or more significant outlay, let's just be realistic and build that into our plan up front. Also be realistic that that might be taking your time, because the bank of mom and dad also turns into the daycare of mom and dad. And when we say you got to retire to something, I know a lot of people want to retire to play grandma and grandpa, but you got to find that time for yourself as well, so that you have mental clarity moving forward in all of those retirement years.
David, those were all terrific ideas that are things that people need to have awareness on when it comes to retirement readiness. If you're ready to get retired and, more importantly, stay retired, because you don't want to survive in retirement, you deserve to thrive in retirement, we need you to connect with a firm that understands you are as unique as your voice. Everything needs to be custom tailored to you. Reach out to us at 833-964-PLAN, 833-964-PLAN. Go online, getretiredstayretired.com, getretiredstayretired.com. You can take advantage of a complimentary consultation. You can see all of our media appearances on TV and radio, and download today some great educational guides optimizing your Social Security in today's world, and the One Big Beautiful Bill Act, an opportunity for investors. David, hey, everybody saw it. It wasn't this Friday. It was last Friday. We had this jobs print. I think it came in a little bit lighter than people thought. In fact, some heads even rolled in D.C. Political appointees lost their job. What do you make, and what does VestGen make of the soft jobs print that we had in this most recent month? Is it a watershed moment, a harbinger of death to come, or is it something more benign?
I mean, I think the pundits on TV think this is the beginning of the end, but at a very high level, right? This was one report. Now, these revisions were gigantic revisions. I think these were the biggest revisions we've seen since COVID. So big changes to the downside on this stuff. I can understand why people would be nervous, but we're big believers here. You got to follow the data. But you got to follow the data when there's a pattern. So I'm not sure one jobs report is a pattern, but if this happens again, or we see it a third time, then I think changes might be warranted. But we're still going to be in a battle, Craig, between earnings and the jobs market. And let's be honest, the earnings numbers that we've gotten from Q2 have been much better than expected. So it's a tug of war. That tug of war will continue. And I think every decision that you as an investor needs to make should be based off patterns of data. That's what we look at here at VestGen Wealth Partners.
Absolutely. So listen, we think the fundamental data, the fundamental price targets for the markets have not moved. But remember, we do have a market that has an awful lot of good in it. And the only way for this market to move demonstrably higher is for things to turn out great. So make sure you're rebalancing, stay disciplined, pay attention to those risk budgets. And there's much more to come. You're listening to In the Know, VestGen Wealth Partners, AM 560.
Would you like a dose of knowledge? Good, because Craig is back and about to fill your retirement prescription. Back to In the Know Radio on AM 560. The Answer.
So we were talking in that last segment about retirement readiness and going into the commercial because you got to pay the bills. We discussed that jobs print. And yes, 73,000 non-farm payrolls getting created. Hey, the good news is it's 73,000 new jobs. The bad news is it was pretty light. It was definitely weaker than the street, that's Wall Street, actually expected. And much more important, though, wasn't the jobs number from Friday. It was the heavy revisions to the prior 2 months. months. And that's where the frustration lies in. You think you could count them right the first time. You would hope you wouldn't have to have the revisions. But what we saw were revisions down for the previous 2 months, and that caused some definitive consternation. And I think that consternation is starting to show up in what could be sector winners and losers coming into the remaining 5 months of the year. And that's what we're focused on right now. You've got 5 months left in 2025 to close out the year with excellent decisions. So David, bring that topic of jobs, and then let's bring that discussion into things like sector winners and losers to give people a taste of how VestGen is viewing money and asset allocation in today's ever-changing world.
Yeah, it's hard to gloss over the numbers. Those revisions, as I mentioned before, were really big, but it is just one report. So everybody's eyes will be glued to the forthcoming reports that we're going to see. I mentioned too, though, that with earnings, right, the profit numbers we've gotten, 83% of the companies have reported, and we're 80% through the S&P 500 companies. 83% have beat earnings expectations. So those are really, really good numbers. But I think what's interesting too is you're starting to see a change in like sector performance. So on a year-to-date basis, if you look at the top performing sectors this year, and we don't usually get into all of these details on this show, but I find it interesting that industrials are the best performing sector, followed by, close second and third between technology and utilities. And when you break that down even farther, I think what a lot of folks would find interesting is while the average stock has outperformed on profits, there's a handful of stocks that have actually gotten whacked pretty hard this year. So for folks that are opportunistic, I think there's a tremendous amount of opportunity as folks rebalance to take some profits from winners, move those into some stocks that have underperformed on a year-to-date basis. And I think the fact that industrials and utilities have outperformed might just be walking into that theme that we talk a lot about on this show, Craig, which is different ways to play some of these larger thematics, specifically AI, meaning if you're going to keep building data centers, what's going to power them? You might need some utilities. So it's strange to see utilities and tech have very similar performance this year, but I think that's opening up investors' eyes to, regardless of what the jobs numbers are, when you make investments, you're making longer term investments. These are not trades that you're moving in and out of on a weekly basis.
So David, let's take all of that and really turn it into action. And I think what we're calling attention to for everybody is everybody knows that technology leading to innovation, creating the disruptions of industries has been a tremendous thematic for the tech and communication sector. But as you're in the second half of this year, and we've talked about pragmatic optimism and diversifying your diversifiers, you have to look to broaden things out, which David is hinting to. And a big part of the broadening, we're going to nerd out for a minute, David, is we're going to talk about the steepening yield curve, right? And what that calls attention to is, yes, as the yield curve gets steeper, meaning short-term rates come down, longer-term rates go higher, which is what I call the normal world. No inverted yield curve, no flat yield curve. We're going back to basics. We're going back to normal. You got to pay attention to those utilities, and you got to pay attention to those real estate investment trusts, because those are two sectors that I think in the stock market sometimes really they're essentially bond proxies. And if the yield curve continues to steepen with the 2-year leading it lower, those sectors, dividends, they become actually more attractive, especially in the case of utilities. And do not deny the undeniable trend that is artificial intelligence, the massive amount of power consumption it takes to run these data centers. And that's why the utilities of today and the real estate investment trusts of today, guess what? They are not the same as the REITs and utilities of yesterday, and they probably have a place in your portfolio. I think in addition to that, I think you got to take a revisit and take a look at the banks. Simply put, banks borrow short-term money and then they lend it out for the long term. So the fact that short-term rates are coming down, falling, and long-term rates are steepening, guess what that means for bank profitability? profitability. Oh, everyone rubs their hands together like it's Christmas in the banking world. It's called net interest margin, right, David? And I think that's why some of these big money center banks, you know how they are? Boy, you got to take a look. It's interesting. Now, I don't think this is a 2025 story, but David, you mentioned at VestGen Wealth Partners, we're always looking ahead. We're always looking ahead. You used to play a lot of hockey, so you always talk about being like Gretzky, skating to not where the puck is, but skating to where the puck might be. And one asset class stands out as an absolute loser for the year. And David, that loser is small cap stock, because small cap stocks have been under the weight of trade. They've been under the burden of tariffs, and they've been under the burden of higher rates. But small cap stocks who are sensitive to those borrowing costs, guess what? Most of those small companies are borrowing on the short end of the curve. And if the Federal Reserve can deliver in 25, and more importantly, invoke confidence that we'll continue to get rate cuts in 26, oh, David, I think we'll get rate cuts in 26. Want to know why? You'll have a new Federal Reserve chairperson who's appointed by the president. Where do you think rates are going to go? I think they're going to go down. So I think it's too early, but you got to be making plans for the future to say what might pop that's currently in drop, and that could be some small caps. So not yet, America, but take a look for your future thinking. And we talk about this because at VestGen Wealth Partners, we are not just financial planners. We are investment advisors. We understand what steepening yield curves mean. You're not going to find too many family office locations where the directors of trading operations used to work on the floor of NYSE, because you need to know how the game is built. And that's why I want you to go through today that VestGen vision process to create retirement readiness so that you too can worry less, which allows you to live more and get to a place that you can enjoy what you've worked for your entire life. Connect with us online at getretiredstayretired.com. That's getretiredstayretired.com, and download for free our guides. The ones you want to download this week, absolutely optimizing your Social Security in today's world. And of course, OBA, the One Big Beautiful Bill Act. That's our investment guide based on changes in the tax code. David, that brings us to an inflection before we go to a commercial. What's most important to our listeners next?
I think, to me, this is the time to be thinking about the next evolution of your portfolio, what I call leveling up. We just outlined the disparity in sector performance, and we outlined how certain stocks are significantly outperforming and other stocks are significantly underperforming. So one of the things we just saw, Craig, is a lot of people are saying, hey, maybe we're in another bubble, and the bubble is AI. If you think that, what I would argue is, well, then why don't you start figuring out some other ways to play AI? We mentioned infrastructure, utility stocks, energy stocks. This is a great time when the market's still within striking distance of the all-time highs to go through your portfolio, take some profits, look for some stocks that have been beaten down a little bit, and prepare for what might be a bumpier ride, or prepare for what could be a more challenging jobs market moving forward. We don't want to be complacent. Complacency is the enemy of success. And I can't think of a better time to have that discussion than today. So I would say, give us a call, go to our website, and we'll sit down and have a real discussion of how we implement moving forward.
I tell you what, you got to stay tuned. This is information you can't afford to miss. We're going to help you level up right after this break. Craig and David, VestGen Wealth Partners, in the know, AM 560, The Answer.
It's more In the Know Radio with Craig Bolanos on AM 560 The Answer, where his goal is to pummel you with financial know-how until you say uncle.
So we closed that last segment talking about leveling up your portfolio. But I think we need to talk, David, what leveling up the portfolio really means to VestGen Wealth Partners, but more importantly, why it's being discussed. And I think it's that why that's so significant. David, there was a great article that was all over the news wires the other week from S&P Global, where he had this senior reporter who's been covering markets forever. He did this interview, and the question that was posed was, is the stock market in a bubble? And if so, what indicators or market signals are people watching? Now, listen, whether or not we're in another stock market bubble, one initial thought stood out amongst the rest, and it's that every bubble in modern history has been based on a narrative, whether it be the internet or whether it be real estate. So I think it's critical that given the narrative is widely perceived by the investment world to be a source of almost unlimited earnings growth and across most market sectors, and today that story is potentially bubbly, inflating thematics that come unquestionably from AI, artificial intelligence, technology. So, David, talk to us in your words about whether you think a bubble does or does not exist, and what are some of the signs that people should be looking for? Because I don't think we're there yet, but you can see the underpinnings, and that's why we want people to be leveling up.
Well, I think if you go back in history and we use real estate as an example, there were some signs before the real estate bubble popped that there were going to be some problems, right? Specifically, you just look at mortgage delinquencies. Now, I think the challenge with that is back in 2006, 7, and 8, no one realized that they might be investing in these packages of mortgages. So people may have recognized, hey, delinquencies are going up. This is a bad sign. But I don't think people recognized that there were investments made in these packages of mortgages spread out amongst pension funds, 401ks, et cetera. Now, when we think of AI, one of the things that I think about is the publicly traded companies that are involved in AI all have long track records. We can all name those 7 to 10 stocks that are heavily focused on that thematic. And at least we have history and we can track their profit margins on a quarterly basis. So I would start there, just looking at the chip makers and looking at their numbers. And good thing we actually get reports on a quarterly basis. And then you have multiple analysts taking a look. I tend to shy away from just using one company as a proxy, because in using one company as a proxy, certain companies can often have like a cult-like following where they can do no wrong up until they do wrong. So I would start there, and I would say with AI, if you think about it, the semiconductors, I don't believe have actually hit an all-time high since July of 2024. So to your point, we're probably not there yet. But investing isn't about timing the market perfectly. And so one of the tweaks that we can make on this, what I refer to as leveling up, is everybody kind of knows those big tech companies, but there are lots of companies behind the scenes. You might not know the names off the top of your head that are heavily involved in those thematics. And some of those companies are not publicly traded. You can't buy them in your IRA or your brokerage account. I think this is a great time for certain individuals to maybe start embracing some private investment strategies that will get access to the next up and coming thematics in your portfolio and perhaps not be paying a premium for those. You just got to know the right places to look. And whether you do that just from pure growth or whether you try to play that through an income side, I think both are appropriate for retirees to take a look at. And as we said in prior weeks, the cool thing about investing is it's becoming democratized. Lots of investors can gain access to this. They just need to find the right partner and firm that can show them what opportunities actually exist today.
David, that's so incredibly important. So as we discuss leveling up your portfolio, it's not because the end is near. The harbinger of gloom and doom is not present. So to be clear, the rally and the premise of AI is still ever present. But if the SOX, the semiconductor index, is indeed acting like a leading indicator for all forms of AI optimism, then I just got to remind everybody that there is a sense of complacency in equity markets right now that do create some risks of a downturn that I think are both underappreciated and, more importantly, not currently priced in to the early stages of the second half of 2025 where we sit. So it's a great chance to do what all great investors do. Let's rebalance those portfolios. Let's pay attention to that asset allocation. Let's make sure we're properly diversified. That's your sector weighting. We gave you some great ideas of where to go today. Let's make sure we're always paying attention to security selection, because last time we checked, price has always mattered, just as price still matters today. And it's having those great rebalancing protocols with governance that allows everything to work together well. And David said it, there is a reduction in the number of publicly traded opportunities. It's down by 40% over the last couple of decades, while the number of private opportunities has exceeded that, up some 60%. I even think the President of the United States is aware of that, as he's doing some executive orders as we speak that you saw to open up qualified retirement plans, 401ks, et cetera, to give more people access. But the truth is, having access isn't good enough. You need to have a different form of IQ. That's not just intelligent quotient, that's implementation quotient. We urge you to partner with firms that have a deep institutional knowledge base of how the world of private markets work and how to participate in a way that generates the efficacy that you as an investor deserve, whether you're doing it in a conservative fashion, a lending fashion, whether you're doing it in an equity fashion, or you're doing it in some other form. There are, again, many different flavors. It's about finding what's right for you. Connect with us online at getretiredstayretired.com. That's getretiredstayretired.com, or give us a call. Phone lines are open, 833-964-PLAN. That's 833-964-PLAN. Download our guides from getretiredstayretired.com, optimizing your Social Security in today's world, because today is all about retirement readiness. And don't forget what's trending the most. One big, beautiful bill act, that's tax opportunities for investors. It's information that you can't afford to not have. David, as we finish this round, and we talked about leveling up, and it was a great way. Be more specific. Can you storytell? Don't use names, but how have you helped a client level up recently?
I think a lot of folks are optimistic about the future. A lot of people we work with are optimistic that the market has kind of moved past the tariffs and that everything that's being implemented today will pay long-term benefits. But they also know that regardless of how optimistic they are in the future, if you protect the downside, usually the upside will take care of itself. So I view some of these private investment strategies as the hybrid. These strategies are great for folks that might want to get out of the stock market, publicly traded equities, but not put a whole bunch of money in bonds. They're trying to find something different. And for those folks who are going into retirement, a lot of these private investments come with income. And we need to grow your income in retirement. And if the jobs numbers continue to get worse and the Fed has a September rate cut, CD rates could go down. Bond rates could go down. We're going to need to find other sources of income. So where we implement this in real life is these are a lot of times investments that might help us generate a higher, consistent dividend yield in portfolio. And as we know, retirement is about cash flow. And we might want to do that buying great companies of America. We might buy some bonds. And this is a great way to level up, maybe increase the dividend yield of that portfolio, but have something that could zig when the markets zag. That's what leveling up is about, and that's what we do a really good job of working with families to create.
So let's get you leveled up today. 833-964-PLAN, 833-964-PLAN. Level up your investment game so you too can not just survive, but thrive going through retirement. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. More to come. Craig and David in the know. VestGen Wealth Partners.
Okay, Hey, Windy City, get ready to be blown away with a hefty gust of financial know-how. You're listening to In the Know Radio with Craig Bolanos on AM 560. The Answer.
One Big Beautiful Bill Act is here. It's real. It's signed into law. All of this happened on Independence Day, the 4th of July. What does it mean to you? Well, there's a treasure trove of changes that are here. Some are good, some are bad, depending on which side of the media you're in. But what does it mean to you? First, it means this. Not all dividends and not all capital gains are created equal. Long-term capital gains, qualified dividend income, there's a lot of people out there that are now going to be able to qualify for a 0% dividend rate, a 0% tax rate on capital gains, and that's courtesy of the tax rates, courtesy of the standard deduction, courtesy of the senior bonus deduction. So what do I say? It's a race to zero. You need to find a way, if you can, to engineer your income for a defined outcome so you too could maybe qualify for 0% dividend tax and 0% capital gains. We can help. 833-964-PLAN. In addition to that, please remember, not all of these changes are permanent. It's really important to own the fact that we just complicated the tax code. Yes, we did, because some of these changes are permanent. Some of these changes expire at different times. What am I referring to? The increase in your salt shaker, that's your state and local tax deduction, it's temporary. And not only is it temporary, it's income tested. So do you know where you need to be to maximize your state and local tax cap? If not, we can help you get there. That senior bonus deduction, everyone who's Medicare eligible is excited because it's worth $6,000 per person. That's $12,000 for a married couple. But is your income going to allow you to qualify? So now you've got $12,000 on the line, married couple, maybe earning that extra dividend, maybe avoiding that capital gain distribution is the difference between you getting or not getting the senior bonus deduction. What do I mean? It's all about the plan. You need to work with professionals that are fully integrated. We are a family office for everybody. A family office means under one roof you access your registered investment advisor, your financial planner. You access your insurance consultant to navigate retiree health care and long-term care. You have your estate attorney, and most importantly, you've got your tax counsel on staff to help you optimize a defined outcome so you too can qualify for the benefits that might exist and apply to you and your family under the One Big Beautiful Bill Act. Connect with us online, GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. You've been listening to Craig and David Bolanos, VestGen Wealth Partners on your favorite station, AM 560. We affectionately call it The Answer.